Hello and welcome to How's It So Difficult? Today we're talking about mortgages. Yes, these are probably the most boring thing about the house buying process. Signing yourself up to 25 years of debt, guaranteed monthly payments for as long as you probably will be working. Not ideal, but all of us have to do it, so let's try and think of the best way to approach it. Now, at the moment, interest rates are at historic lows. This means that the percentage of money you're paying to the bank for them lending you the money is low, and it's never been this low as far as records go back. So in a sense, it's a good time to get a mortgage if you're purely thinking about interest rates. But of course, house prices have gone up considerably in the last 10, 15, 20 years, and even further back than that. So it's kind of a trade-off for the fact that we are now buying properties that are more expensive than ever. The most important bit before you even start to pay off your mortgage is to try and get that mortgage application. And traditionally that meant going down to your bank manager and asking them if they could lend you some money based on your financial circumstances. But things don't work like that anymore. There are a number of different things you can do online to give you a really good idea of how much you'll be able to be lent. Now, normally the rule of thumb is you can get a mortgage to the value of 3.5 times your salary, sometimes 4, and in exceptional circumstances, 4.5. So if I earn 30 grand a year, normally around 4 times that, you're thinking 120 grand. But of course, that's not taking into account what they'll be looking at when you go in for that mortgage appointment, whichever way you do it. You can do it on the phone. There are many brokers that you can call up. It's a completely free service, and you give them all your details and they'll tell you how much they're able to lend you. Or you can go the more traditional route and go to speak to your bank manager. Normally, they look at the last 3 to 6 months of your spending history. That tends to be how banks work. So whoever you're doing it with, whether it's a traditional bank or an online bank or an app even, they will always ask you to send them the last 3 to 6 months of your bank statements. If you are an irresponsible spender, that doesn't bode well when it comes to them lending you money. So what you need to do, before you even think about starting to buy your house, get your finances in order, make things neat, and effectively show them that you are responsible. So if you have a credit card, you are at least making the minimum payment on that card every single month, preferably the full balance. And that can show them that you are responsible and you know how to be lent money. They will look through your expenditure and look at the things that are essential, things like household bills, electricity, gas, water bills, mobile phone, and then they'll look at the things that are less essential, like your lottery ticket. You also obviously want to build up a credit history. Now, lots of people have the idea that once they save the right amount of money for a deposit that they're good to go, but you need to prove to a bank that you are able to be lent money. And the easiest way to do that is get a credit card. This will enable you to put small amounts on your card and pay it off in full every month, and do that perhaps for even a year. And that will show the bank that you are responsible and you know how to be lent money. So when it comes to giving you a big amount of money for something like a mortgage, they will be happy to lend to someone that they know has already had experience of dealing with credit. Don't use it like a credit card, because it can be really expensive to put loans on a credit card. Interest rates are really high. If you pay off your bill at the end of every month, you won't incur any interest fees. And that way you're demonstrating to a bank that you are responsible when it comes to being lent money, so they'll be happy to do it for you when it comes to lending you £250,000 or whatever.